Hey everyone, it is Julie here with TipRanks. In today's video, we're taking a look at 3 stocks that fall under the utilities sector. All 3 of these companies have different areas of focus, different market caps and price points, and even operate in some different countries. But one thing they all have in common is a strong buy consensus from analysts and some pretty attractive price targets. So in today's video, we're going to take a look at what these 3 companies each do, as well as what analysts are predicting for their stock's future. Just before we get into that, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Don't forget, here on the TipRanks YouTube channel, you can catch me Monday through Friday with our pre-market morning update, telling you everything you need to know before the opening bell. So make sure to check those out. All right, now getting into these 3 companies. These are ones that I came across using the TipRanks stock screener, which you can find right from the TipRanks homepage underneath their research tools. For my filters, I wanted a medium to mega size market cap, an upside price target of over 20%, an outperform rating on the SMART score, and a strong buy analyst consensus. And then I narrowed it down to the utility sector and got my top picks from there. The first company from that list that we're going to look a bit closer at is Sunrun. Under the ticker RUN, they're currently priced at $50.69 per share. And on our TipRanks SMART score, they score a 10 out of 10 with very positive TipRank investor sentiment and very bullish news sentiment. Now, Sunrun is a solar-focused company. In fact, they are the nation's leading residential solar, storage, and energy services company. With a mission to create a planet run by the sun, Sunrun pioneered residential solar service. They have over 550,000 customers and have sold their solar service in 22 states, DC, and Puerto Rico. Sunrun is building the future electric grid. Their electricity is produced and consumed at the home with solar panels and rechargeable batteries, which are aggregated to send excess power back to the grid, creating virtual power plants and retiring fossil fuel plants. They're creating a network of decentralized, decarbonized, democratized, and affordable clean energy with consumers. The residential solar market is massive and underpenetrated, with a 15% annual industry growth for the next 10 years that would lead to about 13% penetration of the U.S. houses. Their value proposition supports a much greater number. In markets where their value proposition was evident first, like Hawaii and California, penetration has reached 32% and 15% respectively. Sunrun is the #1 residential market leader and yet remains less than 1% of the total U.S. residential electricity market. Green power has been a big focus lately, and this includes the EV or electric vehicle industry. And Sunrun says that there are synergies between electric vehicle owners and solar power customers. Electric vehicle adoption increases energy demand and enhances the value of distributed generation. More than 80% of EV owners say they would consider installing solar panels at their homes or that they already have them. 30 to 40% of people who own EVs have installed rooftop solar. Now, as I mentioned at the beginning already, all of the stocks today come in as a strong buy. And the Sunrun stock has 13 buy ratings and 2 holds. The average price target is $82.10, which would be about a 62% potential upside. Looking at our detailed list of analyst forecasts, our most recent come from 3 days ago at 48 and 52% potential upside. The highest price target is a couple months old from Barclays with a $108 price target for a 113% potential upside. For our second company today, we're going north of the border to Canada with ARC Resources. They are not listed on an American exchange, but are available on the over-the-counter markets under the ticker AETUF at $5.70 per share, or on the Toronto Stock Exchange under the ticker ARX. ARC also pays a dividend and has a yield of 3.33%. They score a 9 out of 10 on the TipRanks SMART score with bullish blogger opinions and positive technicals. ARC is one of Canada's leading conventional oil and gas companies with operations focused in the Montney resource play in Alberta and northeast British Columbia and the Pembina Cardium in Alberta. These high-quality assets provide both stable, long-life production and superior growth potential. In 2020, they delivered a record annual production of over 161,000 BOE per day and delivered an operating expense of $3.94 per BOE, which is the lowest in ARC's 24-year history. They also reduced their net debt by 21%. For 2021, their business priorities are protecting the balance sheet, supporting their dividend, and prioritizing capital investments that drive long-term value and profitability. For 2021, they're looking to invest $375 to $425 million to profitably sustain production in their core areas and complete small-scale facility optimization projects at Sunrise and Parkland Tower. They're also looking to drill 69 gross operated wells to produce 158 to 165,000 BOEs per day, all while ensuring the safe and responsible execution of their capital program. ARC Resources has 10 current analyst ratings on their stock, and all 10 of those come in as a buy. With an average price target of $8.74, we're looking at nearly a 54% potential upside. Looking at our detailed list of analyst forecasts, the most recent came in just last week from RBC Capital with an average upside of about 67%. We do have a higher price target from Stifel Nicholas, but we're going to look at National Bank as we have a slightly higher rated analyst there, giving a price target of $10.33 for over an 81% potential upside. And the third company on our list today is Clean Energy Fuels. Under the ticker CLNE, they're currently priced at $12.60 per share. On the TipRanks top smart score, they score a 10 out of 10 with increased hedge fund activity and insider activity of buying shares. Clean Energy Fuels is a leader in renewable natural gas. RNG is the only fuel available for heavy-duty vehicles that can have carbon-negative emissions. They have over 550 stations in 41 states in Canada and are a dominant RNG player in the US. They have a blue-chip customer base with customers such as Frito-Lay, Waste Management, and UPS, as well as partnerships with global energy leaders such as Chevron and BP. Clean Energy and BP recently created a joint venture to invest in RNG fuel production. They also joined a joint venture with Total to develop carbon-negative fuel and infrastructure. Clean Energy offers more than just fuel. They provide complete, scalable fueling solutions, offering everything you need from modifying your existing vehicle maintenance facilities to building and operating stations to guidance in financing options. As an industry leader, they've paved the way in new fueling equipment technologies and manufacturing. Clean Energy has just 4 current analyst ratings on their stock. It comes in as a strong buy with 3 buy ratings and 1 hold. The average price target is $24 per share, which would be a 90% potential upside. The most recent rating came just 3 days ago with a $20 price target, and our highest on the list is from 1 month ago from Robert Brown at Lake Street with a $27 price target for a 114% potential upside. So there we have 3 companies from the utility sector, all with very different focuses, but all with strong buy ratings and some pretty great upside potential. Make sure to leave your thoughts in the comments down below on these 3 companies and what other utility stocks are catching your eye lately. If you enjoyed today's video, make sure you hit that thumbs up button and don't forget to catch our pre-market morning updates Monday through Friday right here on the TipRanks YouTube channel. Thank you guys so much for watching, and we will see you back here next time.